Hi, welcome back to the next session. Today we will do a question with regard to section B question, an audit risk scenario. Okay, so here on the screen you can see this question, which is one of the specimen paper questions, and let's go through this question. If you notice, this question is about explaining audit risk, but I want you to look at this highlighted question here. Okay, so this is a typical scenario. Using the minutes provided, identify and describe 7 audit risks and explain the auditor's response to each risk. Yeah, in planning the audit of Mila Cola Co. Right. In the last session, we learned what are the things I should include in my audit risk. As I've highlighted to you, we need to always include the risk of material misstatement, and we also need to include what assertion is at risk. Yeah. So always these two things must be there. Second, about the auditor's response is basically how do you confirm your suspicion. Confirm your suspicion. Okay. So let's go through this question, this scenario, and see how will you handle this in an exam setting. All right. Okay. Let's read this question. Here. Mila Co. manufactures fizzy drinks. Nature of the business is food and beverage such as cola and lemonade, as well as other soft drinks. And its year end, important is to highlight the year end. Year end is 30 September. Why do we need to highlight year end? We need to see immediately in our head, is there any cut off errors? Okay. You are the audit manager of this company, and you are planning the audit of Mila. You attended the planning meeting with the audit engagement partner and finance director last week, and the minutes provided from the meeting are shown below. You are reviewing this as part of the process of preparing the audit strategy document. Okay, so let's read what have you discovered when you were actually planning this. Okay, so from every paragraph that you read, you are trying to identify what are the risks that has been identified during the planning stage. So Mila's trading results have been strong. Yeah, this is a business info. Yeah, business info. The trading results have been strong, and the company is forecasting revenue of 85 million, which is an increase from the previous year. The company has invested significantly in the cola and fizzy drinks production process at the factory. So we see a investment here. This resulted in expenditure of 5 million on updating, repairing and replacing a significant amount of the machinery used in the production process. Now, within this paragraph, before you even continue to read any further, what possible risk that you can see in terms of the material misstatement? Okay, and within this paragraph, all right, they are doing good this year. That's great. They are doing good, right? They have forecasting this much revenue, and we have a business info that they are investing on making this new drinks. Okay, so they have spent around 5 million on updating, repairing, and replacing. So whenever you have such a big amount being spent on updating machinery, the very first risk that comes in your mind is that is there any risk of classification. Yeah, we need to see if there is any risk of classification. What classification? We will be worried. Is there any? Are they? Is it supposed to be an expense? All right, or is it supposed to be asset? So we are worried about that. Okay, that's our suspicion. Okay, now how do we write this in an answer immediately? So I've told you in the last session that we need to prepare a table. So in this table, all right. So how do we make the table? What we do is we split the table into audit risk, and audit uh, response. Okay, the examiner loves tabular format, so I suggest stick to the tabular format. Yeah. So, right, divide it into two. Then let's start by writing each point. Now, when you write the point, in the first part, we saw that they want us to do the first part was about the 5 million on updating, repairing, and replacing, right? So from there, examiner has mentioned many students like to copy sentences from the story and then expect to get marks, and then sometimes too much time is spent on copying the question. So my suggestion is whatever you want to highlight as an answer, first write a heading first, right? So the heading could be a way for the examiner to see that this is what you are referring to. So you don't have to copy the whole thing in the question. Okay, so write the heading. The heading you will write as uh, five $5 million spending on uh, on updating and replacement. That's enough. Yeah, so you write the heading first. Then when you start the sentence, I like to tell to my students that you try to have a sort of a format or a structure in your answer. Yeah, so start like this. You say there is a risk. Don't say there is, it's confirmed that this is the error. Yeah, so just say there is a risk of uh, inappropriate inappropriate classification classification uh, between revenue expenditure and capital expenditure from this $5 million spending. So I always start saying there is a risk of. Okay, then the risk of what you have to show. What is the risk of? Yeah, that's why I've given you, if you remember, I've given you the way to remember all the audit risk, which was finding asset, and one of the C is the risk of inappropriate classification. Okay, so there is a risk of inappropriate classification between, or the risk of wrong classification is also non-compliance with IAS, because in this case the IAS that we are talking about is the PPE, right? This revenue expenditure and capital expenditure comes under IAS 16, you see. So what we want to tell them that there is a risk of inappropriate classification between revenue expenditure and capital expenditure from this 5 million spending. Okay, and after this sentence, then they say you always have to say why you think there is this such risk. Okay, so the risk must not be just just general risk. You must always justify why do you think there will be such risk. Okay, so because, yeah, so you always have a sentence of because there is a possibility of uh, repairs being capitalized and possibility of replacements being expensed. So why I'm thinking there is a risk of wrong classification is because there is a risk of repairs. Repairs is capitalized instead of being expensed, and replacements, which is supposed to be capitalized, is expense. So you always say there is a risk of something. You always say what is the reason you are thinking about a certain risk, and now you talk about the impact. Okay, impact. So the impact is there. This will lead to risk of non-compliance with IS 16. Now, from here, you have to start talking about the impact on the SOPL and SOFP, resulting in misstatement of profit and loss. Yeah, the misstatement of profit and loss. Yeah, misstatement of profits and misstatement of PPE, property, plant and equipment in SOFP. So you notice I'm talking about non-compliance with which IS, but I'm talking about how will this have an impact on the profits will be misstated. Yeah, and then the property, plant and equipment in SOFP will also be misstated. Okay, so then the last sentence that you want to highlight here is what assertion is being highlighted here. Yeah, remember in the previous session we spoke to you about assertion. Which assertion that we are worried about? Yeah, is it completeness? Is it existence? Is it rights and obligation, or is it the valuation? Where are we thinking that there is a possible, which assertion is in danger? So here, because we are not talking about the existence of the asset or the completeness of the asset, we are thinking about the values that are given to the each item. So therefore there is a risk of inappropriate assertion of valuation there. So now I want to, I mean, you will get different questions in the exam, but I want to give you a structure so that you know how to answer. Number one, I'm saying to you is that you need to have, there is a risk of what? And you're not simply ending the sentence there. You must say, why do you think there is this risk? After you already say the why, now you're talking about the consequence to what? Consequence to the SOPL, consequence to the SOFP. Last, you are ending the sentence with assertion. So, how many components here? There are 4 parts here. The first part, the second part, the third part about the SOPL and the SOFP, and then when you see the assertion is the fourth part. This is I want to give you a format of answering. So always have these 4 things in your answer to get a full score for audit risk question. Yeah, many students fail to get this score because they just write 2 sentences and it's finished. You will not get full marks. Yeah, and then how do we form a response? What is a response? Response is how do I confirm my suspicion? I'm suspecting that there is a risk of wrong classification. So what should I do to confirm my suspicion? There. What will I do? Can you think about what will you do? First of all, you will ask for, can I have the breakdown? I want to see what is there inside the 5 million expenditure, right? I want to see out of that 5 million expenditure, how much is being on repairs, how much. So I want to separate those 5 million expenditure and see how much is for replacement, how much is for updating. Then I want to assess which one is supposed to be expense, which one is supposed to be an asset, right? So number one, I'll be asking for a breakdown. Number two, I'll be once I get the figures, I want to even see the source documents to see whether the expenditure is actually a capital expenditure. What do you mean by capital expenditure? Meaning you have capital expenditure means you have spent something which will increase your capacity, which the benefit is more than 1 year. Can you see that? Yeah, so I will ask for a background. Sorry, the breakdown. Yeah, so review breakdown of 5 million expenditure and vouch to the source documents to assess the nature of the expenditure. That's to assess the nature of the expenditure and confirm the classification accordingly. Classification accordingly. Can you see? So I'm not giving too detailed procedures because I'm not writing procedures. I'm just giving a strategy. I'm simply saying I'm going to be looking at the breakdown and I'm also going to be vouching to the source document to assess the nature of the expenditure and confirm the classification accordingly. Yeah, enough. That will be enough. Okay, so that's how you sort of answer audit risk and audit response, which is a sure question in your exam. Yeah. Let's try one more. Okay, one more as we continue to read. All right, we already finished about this 5 million expenditure. Now we talk about as the level of production has increased, the company has expanded the number of warehouse it used to store inventory. So they have more warehouse. It now utilizes 15 warehouse. Some are owned by Mila and some are rented from third parties. Yeah, there will be inventory count taking place at, so there is inventory count taking place at all 15 of these sites at the year end. Okay, so that's the story. The story is my inventory is not only in one location, it's in multiple locations. Okay, then another thing is the warehouses are not all mine. The warehouse itself is rented from third parties. Yeah, so what is the ROMM, the risk of material misstatement? Like in the earlier, in the 5 million expenditure, the risk is in the classification. So misstatement in the classification. Yeah, hence misstating the profit and loss and the SOFP. Now here, what is the risk of misstatement? Or what is the audit risk? Yeah, please remember Audit risk, if you want to refresh your mind, audit risk means what? Audit risk consists of risk of material misstatement because the company is prone to that risk of misstatement due to inherent risk or control risk, plus the auditor's own risk, which is the detection risk, because sometimes the client force us to finish the audit on pressure, time pressure. So they ask us to finish it on time, finish it faster, So we don't have enough time to actually do all the audit procedures. Yeah, sometimes we are not experienced, so our detection risk is high. So in this case, what has happened is 15 warehouse. What do you think will be a risk here? We're not talking about any expenditure or any account here. Uh, so what will be the risk here? You see, when you are doing inventory count, sorry, the client is doing inventory count, your job is to actually go to the inventory count and see whether the inventory count instructions have been actually followed, right? Have they make sure that they have looked at all the damaged, obsolete and slow moving inventory? Has there been double counting? Has there been missed counting? Because inventory levels will affect your cost of sales and profits. So inventory calculations are important. All right. So what should we should definitely attend the inventory count. But now because there are 15 warehouse, I'm not able to attend all. Hence, what has happened is there is a risk that I may not have detected the errors in the inventory count that has taken place. So this gives rise, multiple locations gives rise to detection risk. That is one thing. Okay. Now, I also see another issue here. So this is one statement that multiple locations giving me detection risk. All right. Another problem is the fact that some of the warehouse are rented from third parties. There is another risk of classification, which is uh, this warehouse surely should be recorded in the property, plant, and equipment. But what about the one that are rented? There is a risk that some of these warehouses are recorded by mistake to the PPE, whereas actually they should be expense because it's a lease, right? It's a lease. It's an operating lease, for example. Yeah, so there is a risk of. So I'm seeing within this paragraph there are two issues. Yeah, one is the detection risk because multiple location. Another one is the fact that I may have another risk of classifying wrongly the warehouses. Yeah, so that's the issue. Now, come on, let's try if we know how to write this in our format, in our table. We try, yeah. Come. So risk number two. Risk number two. The title is about multiple locations of warehouse. Please learn to make headings. Okay. Then start your sentence with there is a risk of what? There is a risk of not detecting inventory misstatements during inventory count because, remember I told you there is a risk of, then because it is unlikely that the auditor will be able to attend all 15 warehouse. Okay, so I have a because it's unlikely the auditor will be able to attend all 15 warehouse. I'll just continue here. You make sure that you continue in your table. Okay. Yeah. So I'll just continue. This what will be the impact of this? The impact of this will be that there will be. So how do you say what will be the impact on your SOPL and your SOFP? So write down this could, yeah, not say, don't use the word this will. This could make the inventory be overstated. For example, inventory be overstated in SOFP and hence overstating. Remember, if your inventory is overstated, your profits are also overstated. Why? Because inventory going up will result in cost of sales going down. As a result, profit will be overstated. Yeah, hence overstating the profits. Yeah. Okay, if that is the issue, then again this will lead to either what assertions could be affected. What assertions will be affected? The assertion that will be affected will be, I'll just continue here. Continue your second point. This could, don't say will, yeah. This could impact the assertion of valuation and completeness, because there may be some inventory which is missed out. So it could affect the valuation assertion and also completeness of inventory. Can you see that? Yeah. So write the for answer in full. Okay. There. Yeah. So there is a risk of not detecting inventory, not misstatements during inventory count, because it's unlikely the auditor will be able to attend all 15 warehouse. This could make the inventory be overstated in SOFP and hence overstating profits. And then what will be the impact on the assertion? The impact on the assertion will be this could impact the assertion of valuation and completeness of inventory. Okay. Now, what is your audit response? How will you respond to this? How will you respond to this risk? That when you have multiple locations, you try to think. Yeah. Now, if you have this issue, how will you respond? Your response could be because you have 15 warehouses, you will have to choose which location that I should go. Now, which location you should go? You need to, because you need to protect your risk. You need to minimize the risk of not detecting the misstatement. So how do you minimize? Go to the location with the highest value of stock. So go to the place which has high risk. Why high risk? Because the value of the stock is high value stock. So those high value stock, you should attend those inventory. Also, where you felt that where it based on your assessment of the internal controls of the warehouse, you felt that a particular warehouse needs to be visited because of lot of previous year exceptions report. Exception report meaning based on the report you saw that even in the last year, the exceptions meaning from the records to the actual there is so much of difference. Then you can say, okay, this is a high risk warehouse, I need to visit this warehouse. Okay, so you will have to make a assessment on which warehouse you need to visit. Okay, so that could be one strategy. The other strategy could be, for those warehouse that you did not go, what will you do? You will have to ask the exception report from the count team. That's the only thing that you could do. Yeah, so those who you can, the locations that you can visit, you need to visit, but those you cannot visit, you need to ask for the exception report. So you can see how much differences that they were able to identify during the inventory count. Okay, so come, let's try writing that. So you write on, the response is, auditor should uh, assess which warehouse needs to be visited by selecting uh, locations. I'll continue in the next page. By selecting locations which contain high value inventory. Okay, uh, and have past record of high exceptions. Yeah, so high value inventory and lot of exceptions, then you should visit that inventory. For locations not visited, what should you do? For locations not visited, auditor need to inquire. Auditor need to inquire. What do I need to inquire? I need to inquire the exceptions found during the inventory count. Yeah. Now, I have attended a lot of inventory count. Remember, I have attended, meaning I did not do it. Yeah, and auditors are just required to attend the inventory count. Right. One of the things that we need to highlight in the inventory count is when you see damaged, obsolete, and slow-moving stock, you need to see whether the counting team are they also involved in identifying such inventory. Because remember, those damaged, obsolete, slow-moving inventory need to be written down or written off to their net realizable value because of IS2. Yeah, so you need to also ask this additional question. Uh, in addition, in addition, inquire whether damage, obsolete, slow moving stock was identified during the count. Can you see damage, obsolete, slow moving was. So let me summarize. Number one, I will go to high value inventory warehouse. I will go to a warehouse which has lot of bad past record. For locations that I did not visit, I will have to depend on the exceptions report from the inventory count team. Number three, I will ask from the inventory count team, did you identify any damaged, obsolete, and slow moving stock during the count? Okay, so that will give you assurance that the inventory has not been misstated, because you are afraid that I'm not able to attend all the warehouse. So how will I ensure that my detection risk is minimized? Can you see? I hope you are getting a feel of how to answer audit risk kind of question. Okay, you want to try more? Try more. Try more. Earlier we also identified. Yeah, I'll now let you read the scenarios and see whether you can identify. Yeah? One more was, the third part was about wrong classification. So how many risks you have identified? Number one, number two, number three, because of wrong classification. Yeah, I can talk about this. How many they asked us to do? They asked us to find out 7. Yeah, so we have got only 3. Now, with what else we will see? A new accounting general ledger has been introduced at the beginning of the year, with the old and the new system being run in parallel for a period of 2 months. Okay. In addition, Mila has incurred expenditure of 4.5 million on developing a new brand of fizzy soft drinks. Okay, we read slowly and analytically. Yeah? What do you think about this old and the new system being run in parallel? If you have, whenever you have this scenario of old and new system run together, for sure you will have a risk of what? Risk of either you have, because when you're running parallel, the risk is that you have double recording, right? Or when you have this eventual transition from the old to the new system, there is a risk that some data is lost. Can you see that? Whenever, this is why I said one of the things inside your finding acid is your uh, inappropriate, the transition. Whenever you have this transition, your estimates are going to be wrong. Why will it be wrong? Because you have your data missing, right? Data is either missing, or there's the data which is double data, because you're running parallel. Yeah, so risk of uh, double recording, double recording, or loss of data. Okay, then you will have to think about how will you solve this. Okay, then let me get all the possible, because I've given you a sample of an answer. I'll now see what are the sample points first. Yeah, so the fourth point already. The fifth point is Mila has incurred expenditure of 4.5 million on developing a new brand. Whenever they say such things, you have to wonder, this 4.5 million, is it research or is it development? Because which IS is in trouble? Which IS is at risk? The IS 38. Because IS 38 said that all research expenses, all research expenditure must be expensed off. Research is always an expense. So what is the risk? There's the risk that research expenditure is also classified into development expenditure. Similarly, there's a risk that development expenditure is capitalized even though it did not meet the criteria. Because you remember in IS 38, for development expenditure to be capitalized, it needs to meet the criteria. Which criteria? The criteria that it has to be technically feasible, the criteria that the management must have the financial capacity to complete the development. They must have the willingness to finish the development. Yeah, they must have the market research to support that. Are you sure that people are actually going to buy this new drink? Because if you do not have this new drink, then customers are not willing to buy this new drink. It's likely that you will not recover the benefits. If you're not able to recover the benefits, this development expenditure should be written off as an expense. So again, there is a risk of non-compliance with IS 38. You need to see. So that is could be your fifth point. See, it's easy to identify which are the risks. The issue is in the writing of the answer. When you're writing it, you must follow the structure that I have shown you. Yeah, and that needs more and more questions practice. Yeah, because eventually you'll see that is the similar scenarios that are being asked. So with that, you'll be able to know, okay, what is the audit response for each of these scenarios, right? Then let's see if we have more. As a result of the increase in revenue, Mila has recently recruited a new credit controller to chase outstanding receivables. Yeah, so I have additional revenue, but I have additional receivables. The finance director thinks it is not necessary to continue to maintain an allowance for receivables, and so has released the opening balance of 1.5 million. What is the risk in this sentence? The risk is this credit controller may not be able to chase all the remaining receivables. So there is a risk that there are customers who are still not going to pay. So this is clearly a risk of overstatement of receivables. So there is a risk of overstatement of receivables. Why overstatement of receivables? Because you see, notice whenever we say a certain risk, there is a because credit controller may not be able to chase all the receivables. Yeah, so risk of overstatement of receivable. If the receivables are overstated, meaning the SOPL, the profit and loss, is also overstated because you have released the provision back into the SOPL as a credit item, as an income. Can you see? So which is going to overstate your profits. So again, valuation of the receivables is at risk. Okay, so this could be your sixth point. There, you are coming closer. Number 7, let's see if we can find anything here. The finance director stated there was a problem in April in the mixing of raw materials within the production process, which resulted in a large batch of cola products tasting different. A number of these products were sold. However, due to complaints by customers about the flavor, no further sales of these goods have been made. No adjustment has been made to the valuation of so there has a damaged inventory, which immediately leads to a risk of non-compliance with IS2. Because IS2 is saying that if you have damaged inventory, meaning most likely the NRV is below the cost. So you have to bring down the value of the inventory down, which will still be held at cost of 1 million at the year end. So there is a risk here that risk of non-compliance with the IS2, which says lower of cost and NRV. So we need to bring down the inventory. Also, because I think there are these customer complaints are there, you also need to always link these customer complaints to even this point, right? That there is a risk that there will be, in fact, additional need of increasing more allowance for the receivables, because you already have, you are thinking the credit controller will be able to chase all, and you have put an additional, you have released all the allowance back into the SOPL. Another problem is, because there are complaints, these customers are unlikely to pay because they are having a problem with the product. They have problem, is unlikely they are going to pay. Because they are going to pay, our receivables are again at a risk of overstatement. Yeah, so there are times in the scenarios you can link, yeah, link, and the examiner loves that if you are able to link one point to another point. So this leads to another point, that our even receivables will be overstated. Receivables overstated. Okay, uh, so that will lead us to the seventh point. Then you can actually have more. As in the previous year, the management of Mila is due to be paid a significant annual bonus based on the value of year-end total assets. Now you come to realizing, all this while what has been happening, they are trying to increase, they are trying to overstate the receivables. They do not want to make any allowance for inventory. So inventory is also overstated. All right. What is it? Why are we seeing this? Because one of the risk in the finding asset is there is an incentive to manipulate. Why? Because they are given a bonus. So this number 8, if you want to put that as an additional point, is that there is an incentive to manipulate. Incentive to manipulate. Yeah? If you have incentive to manipulate, the audit response is always a standard audit response, which is to maintain professional skepticism. Professional skepticism. Yeah, and be alert. Okay. Now I'm just giving you points here and there. You can always go through the sample answer. Yeah, in your specimen paper. My point is to show you how to think in the exam, how to come up with the points, and how to have a structure in the answer. Yeah, because I don't want you to memorize anything. My point is that you must be able to know how to answer. Yeah, so you see we have got these 8 points, and then what you could do is now try to actually write an answer for this in the format that I've given you, and then give it to me, and then I will review your answer. Okay, so that's all for this session. All right, thank you very much.